Oil prices are on the rise, but a looming oversupply threat is capping gains. This complex situation is a result of various geopolitical events and strategies. The spark: Israeli action in Qatar. An Israeli strike on Hamas leadership in Qatar has supported oil prices, causing a brief surge. However, the market quickly realized that this action, along with Poland shooting down drones and the U.S. pushing for new sanctions, didn't immediately disrupt supply. Oversupply concerns. The real concern lies in the long-term outlook, with analysts predicting an oversupply of crude. This is due to OPEC Plus increasing production, which will put significant pressure on global crude prices in the coming months. As one analyst puts it, geopolitical risk premiums rarely last unless supply disruption occurs. Trump's tariff strategy. U.S. President Donald Trump has an interesting strategy to pressure Russian President Vladimir Putin. He's urging the EU to impose 100% tariffs on China and India, as these countries are major buyers of Russian oil, thus supporting Russia's war efforts in Ukraine. Inflation and interest rates. The question remains: how far will the administration go with this strategy? Aggressive action could conflict with managing inflation and influencing the Federal Reserve to reduce interest rates. Traders are anticipating a cut in interest rates at the upcoming Federal Reserve meeting, which could boost economic activity and oil demand. And here's the controversial part. Despite these strategies and actions, the supply outlook remains bearish. With rising inventories and OPEC Plus's increased output, the market is facing a potential surplus. This could lead to a different dynamic in the oil market, one that might not be favorable for certain parties involved. What do you think? Will the market navigate this complex situation, or are we heading towards a controversial shift in the oil industry? Feel free to share your thoughts in the comments.